What's up guys, Simon here, and today I wanted to go ahead and discuss how the US has printed over 20% of its circulating money in 2020 alone. Now if you have been a fan of my channel, you saw that one of my first videos was about the US hyperinflation that's coming. This is when the first CARES Act was launched. I thought that we would see a hyperinflation, and it kind of makes sense as to why you're seeing such high stock market prices and real estate jumping as well, even though people are potentially out of jobs. Before we get into this video and go further into what the outcome will be with all this money printing, go ahead, hit that like button and subscribe to my channel. As always, I appreciate it, and let's get into this video. So as we know, the stock market is doing excellent. It's hit its all-time highs several times in the last year. Bitcoin is going up as well, and cryptocurrency is on the rise. Now, real estate surprisingly has also gone up, even though 1 in 4 families is not able to pay their rent or mortgage. And this is all caused because the federal government has printed the most amount of money in 1 year.
Biden urging Congress to pass more than $900 billion in COVID spending.
It's just a down payment. This is not the end of the deal.
All of the currency that's available in the USD amount, about 22% of it was printed in 2020, which is incredible. Now, if you take that type of estimate, basically in 1913, $1 would be $26 and some change today. That's what hyperinflation is. It devalues the dollar, as bubblegum in 30, 40 years ago was 5 cents. Now it's almost $1 a pack and so forth. So this is kind of what's going to happen to the U.S. economy. And people often ask, well, will real estate prices go up? Or will the stock market go up, or will anything go up? Of course it will. The stock market will continue to climb, and even though if we hit a low or a bottom in the stock market, or even in the real estate market, there might be a slowdown. Eventually the stock market and the real estate market will have to rise because of hyperinflation. They're trying to mandate a $15 minimum wage to keep up with it. Everything is going to get more expensive. So buying anything today is more expensive than buying something 5 or 10 years ago, and it's going to be the same way going forward. So that's why I always recommend you get asset-based acquisitions. So if you get a house or a condo or something along the lines that's going to appreciate in value, which is good debt, or if you get a loan on a property that's a good debt, you're going to be in a much better position because the hyperinflation of the US government printing so much money, trillions of dollars, will kick in, and that property will be valued at a higher amount in the future while you get it locked in at a certain interest rate at a certain amount today. The Feds basically printed the money to help combat the recession. They also lowered the Federal Reserve rate to an incredible low nowadays, but they also did it to help Wall Street. If they didn't print the money and give out this type of money, Wall Street would probably collapse and we would be in another bubble that we saw in 2008. Now in 2008, if you don't know, the real estate market has crashed with banks basically giving out negative loans. If you don't know what a negative loan is, it's when a bank loans you money, but they understand that you potentially may not be able to pay for it. And on top of that, you're paying a negative interest rate so that your principal is being added on. Every time you would make a payment that's below interest rate or the negative interest rate, you would get that total added on to the principal. And then the rate was not locked, so they would give out 5 or 7 year loans, and the rate was not locked, so your loan would actually adjust. So all of a sudden your principal has gone up and your interest rate has doubled, and now you can't make that $2,000 a month payment. So people started losing their houses and having foreclosures. Now with all this money printed, that doesn't mean there won't be foreclosures in the market. In fact, after the lockdown is lifted in January 31st, there is potential evictions now, and mortgage companies are gearing up for the second wave of foreclosures. So if you're in forbearance and you cannot resume some type of payment, and if you're not backed by a big bank, you cannot move that loan over to the end of your payment, you're going to be in trouble. Hyperinflation will not save you. The banks know that the value of the property is still going to rise, and they could take that property from you at a cheaper rate than they would potentially be able to buy in the future. So they're going to take the property and sell the property. So all this money printed is good for real estate holders, real estate investors. It's good for the stock market, and typically gold backs the US dollar. Now gold is up as well, so is silver. However, we're at the point where the US dollar is going to be so high, and we're seeing now cryptocurrency as another form of backing the US dollar, or a potential way to have your money invested in crypto. When you invest in crypto, there's only a limited amount of Bitcoins, let's say, and we'll take Bitcoin as an example. You're not regulated. No one can just launch more Bitcoins or print more Bitcoins. And what's happening is, if the US government is printing money, the money you have sitting in the bank or at home in the safe is getting devalued, and it's getting devalued drastically. Single family homes in suburban areas have gone up 15-20% in value. Austin, Texas has gone up. Florida has gone up drastically because people are moving away from the cities. But those 15-20% increases are never going to drop. So either you're buying a home now, or you're going to continue to watch the wave go up because the dollar is getting devalued with the mass printing of the federal government. So if you're looking to potentially invest in real estate, know that real estate as an investment is going to be a wholesome investment. It's going to bring you back your money in the future. And if you could get a tenant to pay it off or rent it out and hold that property out for 15, 20, or 30 years, depending on your interest rate and your type of loan, you're going to be in a good position to cash out $1 million or so in the future, because in 30 years, even a $200,000 home is potentially going to be $1 million. So that is how a lot of people have retired. It's a much better strategy than your 401k plans. It's a much better strategy than a lot of the tax saving plans that you have going on. I always encourage you to invest in real estate, also invest in the stock market, and do so wisely with the proper counseling or guidance. Find a CFA or a financial advisor that could give you the proper investment techniques. But it's going to happen, guys. The money that's printed is going to continue to inflate everything that you own or try to do. And you got to get with it. You got to make sure you're investing past the hyperinflation point, and you're not keeping your money as a savings just to lay around and watch it dwindle down in value. With the printing of money, we're going to see precious metals continue to go up to back money. So any silvers, gold, coins, etc., that's going to go up as well. Cryptocurrencies such as Bitcoin have passed $45,000. I believe they're 46 plus today. Ethereum is a crypto that has gone up very high, and very recently Dogecoin, kind of promoted by Elon Musk, has also been on the rise, probably 50%. It's down today, of course, and it's very volatile. But these type of currencies are going to start climbing, and the government is watching. With them printing so much money, the U.S. government is in so much debt. So they're in trillions of dollars of debt. I think 29 trillion is what I read last time. But that's so much money printed and so much debt that if you ran a business like the government, you would be broke pretty quick. Not enough to pay your bills or your employees or anything of that matter. The reason the federal government could do that, because they tax the taxpayer, so they're able to print money and they're able to continue to just keep up with that debt. And that's one way they're causing hyperinflation too, by printing money and paying more, or not buying down the debt or bringing the debt down, just printing more money to cover the debt and acquiring even more of it. The dollar is going to devalue. It's going to be time where you're going to go into a McDonald's and that $5 Happy Meal is going to be $10. And this is the way it's going to be going forward. Now, it's still going to be the leading currency in the world in terms of paper. China's currency may also climb, but I still think the dollar is going to be the standard. And Bitcoin and other currencies are probably going to start coming up and challenging the US dollar, because they're becoming global and very well favored. In fact, Tesla just bought $1.5 billion in Bitcoin and stated they will start accepting Bitcoin. So they are investing in Bitcoin and understanding that a global currency controlled by the population may be at one point a very big alternative to the US dollar. And that should actually scare the US government. If another currency takes over as the major currency and they're not regulating it, it could potentially be a problem. That's pretty crazy that 20% of the world's US dollars have been printed last year in 1 year. That's 1/5 of all money circulating in the world. I find that to be very amusing, very troublesome, very good if you own assets. But at the same time, it's going to take more to buy more, and people are going to be out of potential money if they're just holding on to their investments. If you're not investing, you're losing. So good luck. Comment below. Hope you like this video. Please hit the like button and subscribe to my channel. As always, I appreciate it. Thanks.